Okay, now this is part 2. So let's say now you are in an uptrend. If you're in an uptrend, the market goes up, then the market comes down. So what you can see here is, you can see the market made a swing. A swing is when the market turns around. So let me do this. And now what you can see is the market goes up. The market goes up. The market goes back up. And what you can see here is that's another swing. You understand? And then the market goes up. Goes down. And then that's another swing. So your job firstly is to identify these areas, because they are very important. Wherever the market made a swing, let's say the market goes back up, how the market is structured mostly, this doesn't happen on every chart. It happens on specific charts. You have to learn to read charts and understand them. Every chart has its own language. So as you can see, this area, this is against previous structure. You understand? What happens is the market goes up, and then when it goes down and then goes higher, when it comes back to previous structure. And then if the market goes higher, when it comes back to previous structure. You understand? So if it goes up, now this is previous structure. Do you understand? So it might come back and still bounce here and go higher, or so on and so on. So that's your job as a trader, to identify these swings. Wherever the market makes a turn, you understand? That's your job as a trader, to identify swings and turning points. It's the same thing, but yeah. So let's say right now we are in a downtrend, for example. We're in a downtrend, and then we have nothing right now. Now we have a swing, and the market goes down. Think of this structure as a wall. If the market comes down here and then it finds structure, if it fails to go below structure, then there's a possibility that it's gonna go higher. But now here's another wall right here. You understand? And it might do this. And that's how you find consolidations. You understand? Because of these areas. These are your structure areas. You understand? So if this market from here to here goes lower, what will happen? It will come back, find structure, then turn around and go lower. You understand? So that's why every swing is very important. So let's say you're in an uptrend, and this is not a trend, this is a consolidation. Let's say you're in a downtrend and the market starts going down, 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 and then it finds, you see this previous structure, and then the market comes back here. What do? That's where you sell. Then the market goes lower. You wait for the market to come back to previous structure. The market comes back here and fails to go higher, then you sell. If the market comes back here, fails to go higher, then you sell. So now let's say the market failed to break this area and now goes higher. If the market goes up, we're still in a downtrend, it can still keep going down. But if the market goes higher than this area, then it's probably going here to the structure area. There's a rule saying look left, structure leaves clues. So if you look left, you can see a structure. And what will probably happen here is, since this is also structure right here, the market will come back, bounce on structure, then keep going higher. And where's it going now? When the market goes up, you buy. You understand? That's where you buy. And now what will happen is the market will probably come back down to this area because of this structure, so on and so on. You understand? So that's my example of an uptrend and a downtrend structure. So if you have any questions, guys, feel free to ask me.